Evening, everyone. It's 6:50, and it's Sunday night, and so this is your gold and futures update that goes into the ladder. Okay, so gold is down again. This is a huge disappointment to me. Um, this high last week of 1879.50 is exactly where we broke to the downside from the last time. So it doesn't surprise me that it was going to be a problem, but I thought that this consolidation might in fact be enough to send it higher. Unfortunately, we've now broken down. Right now, tonight, we're down about $4.50, $4.30. And while this 1837, 1838 area, and then down to maybe 1825 or so, could turn out to be support. We have the rising 20-day moving average right here at 1826.30. That might be able to hold it. It's also right across all of these tops that we just broke out of when we broke the downtrend line. To give you a little bit better idea of why that downtrend line even exists, you can see from the high at just short of 2100, this was a pretty impressive flag that we were breaking out of. And we had this triple bottom, one, two, three, that held the decline in check and started us back to the upside. So I'm a little disappointed that we're going to have to go through another test, and then this whole area between 1850 and 1879 is going to be a resistance again. As you can see, the 5 day has rolled over. We're lower. Unless we turn back to the upside today or tomorrow, Monday, I don't see much of anything right here. If you're in the gold miners, I think that's a little bit of a different story. Gold miners are not gold. Um, they have assets, they have production, and they have profit and loss based on what their lifting cost is for the metal. So, somewhat disappointing. We have a position in CPER, which is copper, and copper was actually pretty strong the end of the week. Here's a look at it. We came back down to 420 and held nicely. And this chart has much more of a positive bent to it. And of course, strength in the EV charging sector, and the infrastructure sector are all a big help for the copper. As you can see, the 200-day moving average has been tested 5 times, and even though it initially fell below, it popped right back up, which is what it did this week. I'd like to see on this one, as you can see, the moving averages are really right on top of each other here. This is the 200, the 100, the 50, and the 5 and 20. The 5 looks like it could be rolling back to the upside, which would be pretty bullish because it's not a very far move from where it is around 434 to where the 20 is at 437.60. So we could get a move back to the upside there pretty quickly. Also, here's a trend line that I did not draw in yet, but coming off the high, we're right there. This is the same situation that we had with the gold when it broke out, except that copper is not does not have an issue with either being an inflation hedge or whether or not it can be used, the gold versus Bitcoin or any of the other cryptos. Copper is an industrial metal, and as long as things are moving to the upside relative to the infrastructure deal and economies in general, copper should be higher. As far as the cryptos, we have Bitcoin up 1,300. We have Ethereum up 59 and a half. This is, let's just take a look at the percentage gainers here. On the basis of tonight's movement, we have Bitcoin up 2.25%, and we have Ethereum up 1.1. So this is a little bit of a catch up for Bitcoin because Ethereum was up big on Friday, up 218, while Bitcoin was barely changed. Okay, so gold coming back a little, down only 3.5 now. The silver down a dime. As I said, the copper is 439 and a half. Stock futures, S&P up 375, Nasdaq up 18, 19, and the Dow is up about 30. The dollar index is up a dime, and the bonds are down 7 ticks, which is roughly a quarter of a point. All right, everyone. Oh, and the oil, which continues to weaken, has traded below 75 tonight, but we have this 74.26, which is the this red line, which is the 100-day moving average. We also have some serious bottoms here in that same area, 74, 74.20. So we'll have to see if that holds. All right, everyone. Have a great week, and I'll be back.